Good morning, Paul Georgie from Allendale. It's June 10th, 2010. The USDA gave us some surprise here this morning for the corn market, especially the ending stocks for new crop corn for the 2010-11 marketing year. 1573. That's almost 250 million bushel less than what the trade was expecting. And how did they get to that? They lowered the carry-in coming off of this the old crop that we currently have in the bin, dropped that by 130 million, raised the demand on ethanol and raised the demand for industrial use. So that increasing demand and raised exports a little bit. So all of that is providing some support here this morning. We should see the corn market open sharply higher. The early calls are anywhere from 5 to 10 higher in the corn. Wouldn't be surprised if we're going to be higher than that right on the opening, because you got a market there that has been extremely oversold, a market that had nothing but bad news for the last several days. And today we get some good news. I think you're going to see some people doing some short covering in there, getting out of the way, expecting this market to rally. The biggest question that I have is, are we going to be able to sustain this strength as we go through today? When looking at the outside markets, maybe we can. The dollar down 60 here again this morning. Crude oil up 100 points as we talk. And the stock market showing some good strength here this morning as well, being up over 100 points in the futures here before the actual stock exchange opened. So some good news there. We also had good news on exports. The USDA released their export numbers this morning. The trade was estimating a 300 to 800,000 ton corn sale. Came in at 1.162, almost 1.2 million metric tons, which is almost twice the average of what was expected. So that is friendly as well. It's telling me that cheap prices cure cheap prices. And when we've seen the pressure in the corn market, as we've seen, the world demand is developing, coming in here, buying this grain. We also had rumors out this morning that China may have bought one cargo of corn that should be shipped into the northern regions of China now. We haven't had any confirmation on that yet, but that's what's circulating here this morning. The technical action today probably can be thrown up in the air, because you're going to see stops hit on the upside here this morning early, and then we'll have to find a direction here later on and see how nervous the shorts get. In the soybean complex, ending stocks there kept the same by USDA, 360. What the trade estimate was, they were looking for 359, so very neutral numbers in the soybeans. We expect beans will be higher this morning because of that, because of the corn market. And the export sales were pretty neutral to maybe a little friendly on the soybeans. 100 to 500 was the range, came in at 551. Wheat, it should open higher this morning also, and there's a market that has been extremely oversold. It has the potential to bounce quite a bit for actually no reason other than just an extremely oversold condition, and we could see some strength there this morning as in sympathy with the corn market. Over in the livestock trade, pressure in the meat continues. Cutout values were down sharply yesterday, down $1.75. Select down $1.85. Cash cattle look like we're going to try to trade in that $92 area here today. We still got some volume to clean up this week. And the futures, however, with yesterday's big sell-off, showing a little bit of a rebound here in the electronic trade this morning, as stock market is showing some strength. And I think that's given us a indicator there of where cattle prices might go. But with the beef under pressure, it's going to be very difficult to get much strength provided by the cash market and get buyers into this futures. The feeder cattle probably going to be under some pressure here this morning again, or any strength in that market could be met with some selling as corn prices move higher here today. The pork, we had some weakness in cutout values there as well, down 90 cents yesterday. Product still is very difficult to move, but it is moving. Talking to a meat salesman yesterday. However, the tight supplies of hogs are still ahead of us from what we're hearing. We think that we could see tighter supplies as we get into this July time frame. We are holding technically around that 200-day moving average in the July contract to hogs. If we break through that, I'm sure we'll see some more stops being activated. But overall, commodity markets look supportive here this morning. We'll have to see how the corn market, grain markets can sustain the good news here as from the USDA. So if you got any questions, give us a call. Check out the Allendale Advisory Report. We'll have much more details on the USDA report and how it might impact us. You can reach us at 800-262-7538. We'll be happy to talk to you. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.